Good morning, everyone, and welcome to the PivotBoss pre-market video for Tuesday, October 6th, 2020. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. What you'll see right here is the ES is knocking on the door to 3,400. 3,400 is a key level here. One thing that has remained intact here is the uptrend that has been in place since, basically the last 6-7 months since the March lows. But even since then, we've remained in a very good channeling environment, and you're already seeing a bounce here off the recent lows. Now, the one level that we talked about to really watch closely to begin the month was going to be this level right here, and that's the 33.92.5, in addition to the FOMC key level at 3,400 quarter. As it turns out, yesterday's high was 3,400 even. Today's current high is 33.99 quarter. We're right at the brink there of either exploding higher through the zone and working our way up toward the recent highs of last month, or we're going to see a likely failure upon a rejection of this level that could bring us easily back to 3,300 at the very least, and at the most here bring us down to the previous month's low. So again, we are right at the zone here, and so far everything has been bullish. Failed new low, continuation, new highs, new lows, higher lows all the way up, and now you're seeing price right at that FOMC key level, which again, we sold off initially. When we got this rejection, I thought we might have had a shot until we failed there, and then that led to a new low, and now we've gotten the move back. So again, the FOMC key levels of magnets have worked really well as a concept there, and you can see that if we break through that zone, we're likely going to rally to the recent high. That high, it's a blue line right there. That's the top of the PivotBoss pivots, and then there's a green line right there. That green line is projected from the low of the month, the current low of the month, and that is our primary target for the month based on average monthly range over the last 10 months. And then what you'll see here is the 100% of average range is above that into 3680. 3680 also happens to be our 25% on the PivotBoss pivots, 25% expansion from the previous month's range. So right now, what we're seeing is a test at a very important zone, and we could still fail here. I would say if there's a failure to hold 3380 on an intraday basis, that could open up a wider pullback today. All right, let's take a look now at the NQ. Again, the NQ rejected the 11.6 level here. 11.6 has been in play. 11.550, 11.560 is the midpoint of the previous month's range, rejected early with a bearish outside day. And now price is back inside the pivot range for the month. The pivot range is narrow. It's a lower value narrow relationship here, and then you can see how compressed these last 4, 5, 6 days have been. If we put this up on a 1, 2, 3, 4, 5-day range, because it's a completed 5-day range here, we could put it on 6, which would be a developing as well. But if we did this to a 5-day range here, click OK. The PivotBoss Advanced ADR indicator will show us it's right at 65%. So it's not quite compressed against the average because you need it just below 65%, but it's right there. And so that tells you that these 5 days here are very compressed, and the current 5 days are compressed, and we could be looking at expansion soon. Expansion could take the form of 785 points of range ahead. So 700 points, nearly 800 points. 800 points from 11.4 would take you right here to 12.2. So that's a pretty easy move. So right now we're building the energy in the NQ for the next key move. One more thing, I do want to bring this to a 6-day range, because on a 6-day range basis we might already be compressed. There it is, 58%. The 6 days are including 1, 2, 3, 4, 5, 6. So this little diamond pattern, and this is showing 890 points of potential range here ahead. So 900 points, again, from 450 plus 900, you're getting right here in the center of this target zone. All right, let's take a look here. Or if we break down, same thing, down to the downside. So again, compression doesn't really say anything about direction, but right now everything's flowing higher. And if we can push through 11.6, it really opens up the upside. All right, let's take a look now at crude oil. With crude oil, this one has had some incredible strength the last 2 days. Really, really strong stuff. And it really actually has been now 3 days running, because this was Sunday night when it tore higher, and then at the RTH Open continued higher into the close, holding those gains. And now, again, seeing another round of strength over the last 5-6 hours. So very, very bullish right here for crude oil. Again, we talked before that if we got down here to the key range low of 36.13, it could be an opportunity to bring it back toward 40. 40 has been the major pivot. It is the midpoint of the impulse range, the exact midpoint. It's also the exact level of the September FOMC key level, which has seen a lot of chop around that level. The only thing is we didn't quite get into the 36.13s. We got into 36.63, so we kind of shortchanged it just a little there by about 50 cents, and then it snapped back to 40. Now that we're at 40, there could be the potential to be stuck around that level as we had become stuck before, unless this is really going to turn into something really bullish, in which case you really need to start getting above 41s, breaking above a prior pivot high here, which would open up the recent highs between 43.5 and 44. So right now, the fact that we're at 40, that is a destination right now. 40 has been traded around for quite a while. You can see right here. And it's happy trading in that zone. And then once it's done with it, it'll trade up here. And so right now, again, we could get stuck around this zone unless we start to push through 41s and open it up to the upside. All right, let's take a look lastly at gold futures. Now, gold continues to trade inside the pivot range here for the month. The pivot range is fairly narrow for the month, and you can see the last 4 days are basically inside the range. The midpoint is right here at 1926. I mentioned yesterday that we were likely going to see, we were showing a failed new low that could lead to a move higher for the day, but we really needed to get above 1926 to really open up the next wave of strength to the upside that can take us right into 1981.70. And price got right close to it. Even today's high is 1925.80. Yesterday's just below that. So it is right there. Again, a narrow range here. You can see quantified down here on a 6-day range basis, 49% of ADR. So it's already compressed right now. Obviously, the day's not over. So if this thing were to break out today, that signal probably goes away. But this right here shows you have about 108 points of potential range that could be seen. 108 points takes you to 2030. 2030 is right back toward these highs here. This is 35. That's about 2030. That's right inside the target zone here between our 100 and 75% targets, etc. So it's coiling up right now. And you can see the potential here that it has to really see that expansion. And I think 1926 is going to be the key level there. If it can get above that zone, it really opens it up to 1981.70 at the very least, and then a shot to go beyond that. A failure here would be significant. A failure in this zone would be another lower high, which would, a lower high, technically you would need a lower low, and now you would be testing prices below the key range low for a second time, which could be a bit more bearish moving forward. So this is going to be important and interesting here. But again, as I continue to say, 1874 remains the key level. It could drop as deep as this and still be a buying opportunity to 1981.70. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.